Welcome to the weekend edition of the Fear and Greed Business Headlines, the week that was, a wrap of the biggest stories over the past 7 days. I'm Sean Aylmer. Earnings, share price crashes, and strong equity markets. It was a week where big corporates took centre stage. It was a big week for share markets. Locally, there wasn't much change in terms of the bottom line, but there were huge gyrations from companies within the index. More of that in a moment. Wall Street has traded within a range over the past couple of weeks. That means some days are up and some days are down. But overall, there's not that much movement. There's been plenty of speculation about a $1.9 trillion stimulus package from President Joe Biden, but it hasn't arrived yet. The other notable commentary this week on markets was from Federal Reserve Chair Jerome Powell, who said he wasn't worried about inflation and easy monetary policy was here to stay. The Aussie dollar rose slightly over the week, though not much happening there really. Oil prices pushed beyond US $60 a barrel for the first time in more than a year as the global economy started to recover from the pandemic and investors punt on the big US stimulus package. But the big winner this week was Bitcoin, which hit a new record. Tesla, the electric vehicle manufacturer, bought $1.5 billion worth of the stuff and will eventually allow people to use Bitcoin to buy a car. Also, Bank of New York Mellon Corp, one of the biggest financial institutions in the United States, made it easier to use Bitcoin as a currency. In global news, things warmed up between the United States and China. The relationship between Washington and Beijing is the biggest geopolitical story of 2021. President Biden gave his counterpart Xi Jinping a call. Or maybe it was the other way around. Actually, I wonder who's on the phone first, waiting for the other president. It's probably a game of brinkmanship, wouldn't you think? Anyway, I digress. Reports said that the conversation was cordial at best, with Mr. Biden continuing the US's strong stance, chiding China for its human rights and commercial record and for bullying allies like Australia. There were large protests in Myanmar after the military staged a coup, removing leader and peace activist Aung San Suu Kyi. An Australian advisor, Sean Aylmer from Macquarie University, was also captured and, according to reports, is being held in a prison. It was a week in which we found out that Australians spent $350 billion in retail trade last year, in shops and online. And the big mover, in terms of increased sales at least, was alcohol. Sales were up 25%. Not sure what that says about the Australian psyche during COVID-19, but I don't think it's good. What we gave up were clothes, shoes, and newspapers and books. And, of course, cafes and restaurants. They had a shocking year. The other stat I liked from the Bureau was that 35% of total retail spend went to the supermarkets, but just 5% to the department stores. It wasn't a great week on the COVID front. Victorian Premier Daniel Andrews put the state into a 5-day lockdown from last night. It follows more new cases of community-transmitted coronavirus in the state. The variant is the UK strain, which is particularly contagious, and Mr. Andrews said a short, sharp lockdown was necessary. The state and federal leaders agreed to keep the hotel quarantine system going, after much debate, of course. There was some good news, though. The European Union said it was okay for Pfizer to export its vaccine to Australia. The first jabs are expected within weeks. There was also plenty of debate about the efficacy of the AstraZeneca Oxford jab. South Africa, after a number of small trials, halted its vaccination program, worried that the dose wouldn't help mild to moderate cases of COVID-19. The World Health Organization disputed the findings, as did Australia, with the World Health Organization saying it supported the efficacy of the AstraZeneca treatment. There seemed to be some sort of détente between the tech giants and the government. Looks like Google won't pull out of Australia after its boss spoke to Prime Minister Scott Morrison. Remember, it's about the government legislating a code of conduct for the tech giants, which would force them to pay for content from news outlets. Google and Facebook have built their models on not paying for content, so the outcome in Australia is being closely watched in North America and Europe. On Friday, the Senate ticked off the legislation, so it's likely to come before Parliament as early as next week. On to earnings results. Commonwealth Bank said it would pay a higher than expected dividend, made a touch less money than expected, and the economic outlook was good. Given all the carry-on in recent years, the CommBank result was almost boring. Telstra delivered a solid profit and dividend, and its boss, Andy Penn, promised better times ahead. Meanwhile, the National Broadband Network finally made a profit A handy one at that, $424 million for the half year. It's now connected to 7.9 million premises. AMP said its suitor, Ares Management, was no longer on the doorstep. It seems the US group wants AMP's funds management business, but it's not its wealth and banking businesses. AMP reported a higher profit. AGL reported a big bottom line loss and said electricity prices might not bounce back anytime soon. Bad news for the energy companies. Gold miner Newcrest had a cracker half year on the back of higher gold prices, while toll road operator Transurban suffered from lower traffic volumes. Macquarie Group's quarterly trading update showed a revival in mergers and acquisitions, initial public offerings and trading. Suncorp and IAG both reported a jump in prices, aka premiums for us. Those price jumps had helped their businesses. An annuity provider and funds manager Challenger reported a result largely in line with expectations, and its share price was hammered 15%. The building companies were mixed. James Hardie has benefited from the revival in housing construction, particularly in Australia, while Boral has suffered from a drop in high-rise apartment construction. News Corp reported its best profit in 7 years off the back of its US business, and REA.com said its profit to the end of December was up 13% on the back of the hot property market. REA's share price hit $1.62 during the week before falling back a bit. It's been a remarkable run for the group, with the share price more than doubling over the past 10 months. There was also a takeover bid thrown in this week of telco Vocus Group. A Macquarie-backed fund wants to pay $3.4 billion for the administrator of fibre optic cables and owner of Dodo and iPrimus brands. Property company Dexus, which is the largest office landlord in the country, and SCA Property, which owns neighbourhood shopping centres, both said things were looking better. And finally, oil giant ExxonMobil is set to close its Altona refinery in Victoria. Now I get to the point where I go through the biggest story of the week, the sleeper story, the most remarkable story, and my favourite story. The biggest news story of the week was all about Crown Resorts. A New South Wales inquiry found that it wasn't suitable to hold a casino licence in the state, just as it was putting on the final touches to its $2.2 billion building at Barangaroo in Sydney. The building is great, shame about the licence. Commissioner Patricia Bergen was scathing in her conclusion about Crown. It dealt with gamblers with connections to triads. It didn't look after the welfare of staff. The CEO, Ken Barton, wasn't up to the job, and many of the directors needed to step down, according to the Commissioner. James Packer had too much control and needed to divest most of his stake if a licence was to be granted. Testimony from Mr. Packer and other directors ranged from intolerable and unedifying to lacking in candour and inexplicable. Commissioner Bergen certainly didn't miss. I think it's fair to say it was the most complete condemnation of a large corporate in Australia in recent years. While there's plenty of pressure on Chief Executive Ken Barton to step down, so far he's holding his ground. The sleeper story involved the $3 trillion superannuation sector. Figures from the regulator show that $36.4 billion was withdrawn from super funds during the pandemic by 3.5 million people. Members were allowed to take up to $20,000 out of their funds. While it helped Aussies during the pandemic, there's a lot of people who will have lower retirement incomes as a result. Superannuation is going to be a big deal in the run-up to the budget in May. It looks like the government wants to keep the super guarantee at 9%, rather than increasing it to 12%. Labor and the unions disagree, and something has to be done about financial strategies in retirement. It isn't just about saving for retirement, it's also about working out the best way to spend the money. The most remarkable story comes from earnings season. Companies that fail to meet earnings forecasts, think AGL, and even those that do but don't upgrade forecasts, think Challenger, have been hammered. Share prices of big companies are falling by 10 to 15% in one session. That's straight out irrational because the market these days is so well informed about companies. It's so remarkable that it makes me wonder whether there's more to it. My favourite story this week involves Woodside Petroleum being investigated by the offshore petroleum regulator after one of its platforms fell into disrepair. Why is it my favourite? Well, who knew there was a regulator of offshore petroleum platforms? That got me interested. But then I found out There are somewhere between 1,200 and 1,500 platforms around the world, depending on who's counting, with the largest numbers in the North Sea, Gulf of Mexico, and the Persian Gulf. They are some of the largest man-made structures. And what happens when they're no longer in use? I have a new goal. Visit a platform before I die. And that's everything you need to know from the last week. Hope you enjoyed it. I'm Sean Aylmer. I'll be back on Monday morning with the Fear and Greed business headlines. I look forward to your company then.